Hello, this is the first weekend of October 2010. Welcome to today's Silver Log and some technical analysis. We'll look at silver. We'll look at the 15-minute chart, which is the current one, the daily, the weekly, and the monthly. There are no dates on this particular chart, but this breakout of the rally occurred on the morning of the 24th of August, and since then, we have been in a spectacular uh, bull market. And I'm trying to figure out the word, but a slow and steady stair step move to the upside. The green line represents the 5-day moving average. So we had a test once, a successful test twice, a successful third test, and a successful fourth test. Four tests on the 5-day moving average. What this is telling us is the bull market is holding up. There is no selling pressure whatsoever that has done anything to either make it want to reverse or even correct through time. This upwards trend line, since established in here, we had a hit here which really touched it on three different occasions. Once, twice, and three times. So it had a hit there, a second hit there, touched a few times, a third one, a fourth one, a fifth one. So therefore, we're really in this range. And I could put a line down below here, but I don't really think it's necessary because the 5-day moving average is already doing that to begin with. And every single one of these corrections we have been sideways actions for a few hours, maybe a couple days, or the 1-2% moves that have been occurring, and that has been it. We had the big rally here, correction through time, move higher, then a correction through time, but another correction through time here, correction through time, and a small price correction. It's all been very, very bullish. Now, at some point, this range is going to have to break. Therefore, we could stay in this range and keep going, stair stepping our way higher. And because we've been in this range for 7 weeks, the odds would favor we stay in this range. However, if you don't stay in the range, that means we'll have to break either the trend line upwards or the 5-day moving average, or we would have to break the uptrend line. So if we break the downtrend line, that could mean either a reversal, which means that maybe we'll test some of these areas of support, these moving averages that you see, the key Fibonacci levels, and 20 actually is the previous resistance area. We'll get more into that when we look at the daily, weekly charts and so on. So one, you could have the reversal on the breakout. Two, you can end up even having a correction through time. Maybe we trade in between 21 and 22 and a half for 4 or 5 weeks. That's another possibility of what could happen. And then you got the break of the upward trend line, and that one would be huge. As a break of an uptrend line generally means a significant higher move that would come towards the upside. We're going to move this now to the daily chart. And this is the daily candlestick chart. And we can see here that this is an overextended market. And what we need to do is we need to establish some sort of support. But there really is no such thing as up too much. Yes, it's overextended, and it can stay overextended. And as it's overextended, when you have higher gains, say you go to 25, 26, that means you would expect a pullback, but as it goes higher, you'd expect the pullback to be greater as far as the location. Right now, you'd be saying, okay, we'd like to see a pullback roughly around this 19.5 to this 20 level. And as it goes up to 24, 25, well, you know what? Now I want to see a pullback to 22. Then it goes up to 28. Well, let's look at some Fibonacci. Maybe 24 is where you expect a pullback. So the higher it goes up, the the higher the pullback level you would expect it to trade between. And one of the things I was stating is when you're in a range, and this range is generally from 17.5 to about even 19.5 as the more relevant part of the range. I guess you could even make a case for 17 spot too. But when you're in this little trading range, what do we see? We see this fake out here, or that of a failed move. Oftentimes from failed moves can come fast moves. This really wasn't one of them, because there's a failed move and then it wasn't really much of a fast move. It just entered back within the range, and that's very, very normal. But we were in this range. We broke it. We broke out of it, and excessively towards the upside. What we'll do now is take a look at this the same chart, but reduce the amount of candles, and look at them really individually on this rally. So we start this rally on the August period with two significant candles towards the upside. We follow that off with three candles of time consolidation. After that, we have a bull market a candle that brought it above this resistance. One candle consolidation. These two candles bullish, and then four candles correcting through time. We follow the four candles correcting through time with four upward momentum candles, followed by three candles correcting through time. And then we have these really 6 different candles with the move higher. And within these 6 candles, you have this candle here, which was more of a small price correction, or that of a time correction. Same with this one in here. And we finished the week off with a time consolidation. This is very, very bullish. And all the rallies that we have had, like I've been saying for quite some time over the last 3 weeks or so, has been the short amount of time or just a small price movement. For example, you go from 21 down to 20.5. That's 50 cents. That's like 2%. Or this one here where you go from 21.70 down to about 21 and change. That's about 2.5% down to this bottom here. So the retracements have been very low. Now, silver is extremely, extremely volatile, and at some point we're going to have a decent price correction, but it's a guessing game to when we will get towards that level. We will lose 30, 25% from whatever top we have at some point. But that could mean losing 25% when we get to 80, which would mean a retracement back down to like 50 something. You never know, because overall what we do know is the fundamentals of the fiat dollar currency. We know the manipulation within the silver market. So the end game seems very clear in that silver is going to hold its value. I've said this before, and I'll say it again. There's really only a couple things that should destroy a silver investment, and that is, one, the need for the physical metal. What in all of the industry uses just plummets towards the downside. If we don't need it, then it doesn't become that valuable. Or two, we have an excessive supply. We mine so much more, we find so much more. That is what will destroy the silver trade. Right now, there's no signs of either or coming into play. So we'll now adjust this to the weekly chart. And within the weekly chart, it's been this little range or this resistance level that we've tested for quite some time. Let me just reduce the size of that because that's a little thick. And there we go. So we have this range, this resistance level that was tested. We had the test here, we had a test here, we had a test here, and it is obviously broken above that level. As far as the '08 highs, it is obviously above that level. So we haven't really found the resistance at that level like we might expect that would happen. However, that doesn't mean we look back after the fact that we can say, well, it was a small pierce above the 21 and a third level, and it retraced back. That would be very possible, along the way. And of course, another area for support, you just connect this trend line. That's when we start to see selling. For now, you can ignore this support line because we are nowhere near that level. So we'll now take a look at the weekly candle chart on the shorter tick. And I find this little pattern in here very, very interesting. It might look like a little fish pattern, or I don't know, some sort of Aquarian sign. How it just starts to how I don't know. It's just but basically what we see within this pattern, it was that of a time consolidation. We have a bull market run from the February lows upwards into May. It consolidated through time, so that gave it enough energy to have its current rally that it's going through. So looking at the last 6 candles that we have encountered, we have 2 bullish candles, we have a time consolidation, and we have 3 bullish candles. So this is just starting to look overextended. And if we have the same similar look like we have on the daily chart, where we have a couple candles moving sideways and a couple more moving towards the upside, then this chart will get to like 40 in pretty much no time. Now, the key Fibonacci levels that I've been really looking at has been towards the 21, 21, and a third area, and it seems as if it really wants to get above that level, and thus the next big level is 24. I think if we manage to get up to the 2250, 2260 level, then 24 has a very good chance of approaching, even within at most 2 or 3 weeks after it reaches the 22.5 level. That's because resistance was supposed to be tested around this area where I have this line. It has not been the case. And when you break the key levels, if you break a key Fibonacci level, if you break an area, a moving average, or something that you expect to have good chance of resistance, what that means is that you have a lot of bullish sentiment, and you really got to look towards what the next levels are. And on a Fibonacci level, the next levels moving towards the upside is that of the $24 level. So therefore, we've had this break of this trend line. Very, very normal to see this come into play. You can make a case that it was more of a symmetrical triangle, and it has obviously went towards the upside. And I shown this chart earlier this week, which is the monthly term time frame, and it's by no means overextended. It's very, very bullish. The resistance that we had in 2006 was support this year, and we can make a case for, well, we're above this line. We've only had 2 candles towards the bull run, so it's not overextended. We could very easily have a third monthly candle that surpasses towards the 24 area. Also, one thing you might want to notice is maybe we have a time consolidation candle, like I was mentioning before. A candle that looks something like that, even a candle looking like that. There's some more time consolidations in there. If we have a time consolidation, that can give us more energy for making the next run towards the upside. And I'm going to finish this video at this. It's almost been 15 minutes long, but it's good information. Silver is quite bullish right now, and there really shouldn't be any surprise within the matter. Now, as far as hedging against silver, I'll be making a video later this weekend talking about the options market. There's ways of protecting it within put options. And right now, I see this going to 24. And if you do want to do some protection, I don't really think you would need too much. If you're making any kind of trades, try to find whatever strategic moves you can that would be in your best interest, whether you're trading within the COMEX market, the SLV, whether you are buying and selling physical. One way of trying to profit on buying the real metals is you buy low and you sell high. That means you start selling a little bit of your silver now, and probably not much at 22, maybe a little bit at 24. And then if you are able to buy it back cheaper when it retraces, then essentially what you're doing is you're increasing your silver holdings. Now, the risk you have with doing this is you sell some at 24, there's not much resistance, you thus lost some of your silver holdings. So thank you for watching and have yourself a great day, everyone. Bye-bye.